So this is what we got going on. The market just opened, but we won't be doing any trading on today. We're just going to be doing some tape reading on today, do some reviews of what we've done in the market thus far. Now, one thing that I do want to show you all is a trade that happened last night, right? It's this trade that I took on last night, and some people are going to feel as though, okay, Jeremy, um, why did you not take this trade on live with us, But I couldn't go live with you all on last night. I just couldn't go live on last night. Um, I had some things going on, but when I did had an opportunity to log into the markets, I was able to see what I needed to see, and that right there alone was all the confirmation it was that I needed to be able to take a trade, right? It's like when the opportunity in the market presents itself, you just take full advantage. And that's what happened last night. We just took full advantage of that. But today, what I'm more concerned about and what I want to go over with you all is obviously we want to take a look at things outside of indices for a second, right? Um, I want to tap into a little bit of the Federal Reserve, take a look at mortgage rates, take a look at M2 money supply. We take a look at the dollar, and we take a look at probably some other currencies. And we start off with probably silver and gold. And so that's what we see on the charts right now is silver. And you know what my take was on silver, right? And we're going to get a little bit into that. But the first thing that I wanted to do, and I've been trying to put this thing together for us. But the first thing that I wanted to do is you know how they say you could give yourself a pat on the back when you do something right. When you get something wrong the first time, but you get an opportunity to get it right again the second time. That's that's what last night was all about. And if you know anything about what we did within our last, I'll say our last trading day, right? During this was more so during what can we say? FMOC. FMOC. So AM session FMOC, we saw something in the markets, right? And I know this is going to be going back to indices, but it's cool to be able to do that. I have no problem with that, right? Because at first I wasn't going to, but let me do so real quick because this is where I got to give myself like a pat on the back, right? So what I want to do first is give me a second to be able to pull this up so you can see exactly what it is that I'm talking about. I'm gonna take you back to that time frame, okay? So give me 1 second. And this is going to be interesting, oddly enough, because when I see something like this happens, and now that I get an opportunity to be able to do this live with you all, if I make a mistake and then I correct my mistake when I get the second opportunity, I want to be able to show you all that. And I think that's the difference here is the fact that I'm willing to be able to show you all where the mistake was made and how we corrected it. So let's pull this up. Let's pull this up. Give me 1 second. Let's go here. And we go to FMOC. How many of you remember this day here? I'll pull this up so it could be a lot bigger. How many of you remember when we were trading this here live, right? We were live in this trade on MES, and it was getting close to around 10:30, right? So it was about 10:24, and we were getting close to 10:30, and we had this move happen in the market, right? So obviously we took longs, and that trade panned out, right? But here's the thing. We're going to go back to that day specifically in time on the charts. So let's go to the charts and look at it on the charts, right? So I'm going to put the charts back up, right? So we got that pulled up. Let's go back to the charts, and we're going to go to MES during that time frame. I want to show you all. This is how you know when you are hitting around being a great trader versus being a person who claims to trade, but you know nothing of cleaning up your mistakes. And I've seen traders take trades and never clean up their mistakes at all. Period. I've seen it time and time again. So initially, we took this trade on both too as well. We took it on ES and we took it on NQ. But here's the problem, though. I mean, here's the mistake. So if we go back to that day, right? We go back to that day and we drop down. We're in that 5 minute time frame, which is cool. So here's that time. It was about 10:24, right? Here we go. So it was somewhere around this time frame here. So we dropped down to a 3 minute chart. Well, we could go to the 1 minute and just go all the way back. That'll make it better. Here, we could take this off real quick. Here we go. So that day, we knew we were creating higher highs and higher lows. We knew we were creating that, right? We had equal lows here. Here's a higher low, higher high, higher low, higher high. So we just knew we was creating higher lows and higher highs, right? So we went long around this time here. So 10:16, around this time was when we hopped into our position, 10:22. So we hopped into our position somewhere around this time frame, right? We hopped into our position. And if I could go back and play this out. So this was around, okay, so 10 o'clock, 10:24, we're trailing up. So it was the 17th. So this is the 18th. So it was the 17th. It was the 17th. Okay, we was a little wrong there. It's okay. We're gonna go back. that's the end of the day. Oh yeah, here you go. Because here's the big move that happened on us. This was 11:45, 10:45, 9:30. Okay, here you go. So this was the initial day that this happened on, right? So here's the 17th, and we went long here, and we were able to capture this move. And so I like the fact that we can go back, right? Because it's almost like a journal. You can go back and you can assess what was done, what you did in the market, and how this played itself out. It might sound weird when you talk. Oh, the mic sound good to me. But good morning. So we going back. So y'all remember when we took this trade here, right? When we were live and we took this trade, and when things panned itself out, right? We was like, okay, we're in profits here. This is an opportunity for us to be able to. Our initial TP was here at previous day high, and we wanted to sweep liquidity here. I will never forget this, right? That was our target. It was looking something like this that day, right? We were looking something like this, and this is what our goal was, to target this liquidity that was up here. We wanted a sweep of previous day high, but we did not get that because it was something that we did not account for, right? It was something that we didn't account for. And what we did not account for was, if you go to the 15-minute chart, and I have to, let me put a line here so that we'll be able to track this back down, uh, because I don't know if this thing is going to shift given the fact that we are. So we'll put a marker here for us, and we're going to drop to the 15-minute, right? So obviously we got to go back a few days. Okay, this is the 10th, 11th. Okay, here we go. So this is what we didn't account for. I want to make it to where you all could be able to see this. All right. We move this out the way. So our initial plan, as you can see, the market is pushing up, right? We was able to catch in on this reversal move here, and we were planning to be able to go and sweep previous day high and take out liquidity that was here, right? But we did not get that. We did not get that. What we did not account for was what? If you go to the 1 hour chart, and I'm gonna show you this. We went to the 1 hour chart because you'll be able to see it a whole lot better. Here we go. 17th during this time, and we just pull this down here. Here, around this time frame, there was a gap that we did not account for, and we missed the opportunity to take on shorts, and we get the reversal. I'm going to play it back. Y'all remember this day here? We're going to play it back. So let's make this bigger. And this is what I talk about as a trader, how you're able to point out your mistakes. We literally pointed this out on live while it was happening. I said, oh my goodness, we did not account for the gap here at 76.01 where we should have taken profits. This should have been our first initial TP. We said this should have been our first initial TP. This wasn't our first initial TP. Our first initial TP was slightly where? At 76.04 was where our first initial TP was, right above this gap, where we should have took 50% of this fair value gap in order to be able to go into shorts. Let's just watch how this played itself out. We ended up closing out this trade. Beautiful move. We're getting ready to hit our first initial TP right at midnight open. Those who are live this is what I'm talking about. Beautiful. About trading, but they are not able to go back. Beautiful. And assess where something. This is a beautiful trade. So right here, when we entered in 50% of this gap, that was here. Beautiful trade. We should have taken profits, right? And our initial bias on this day was W's in the chat. W's in the chat. Now you can move your stop loss to break even. When we tried to short W's in the chat. We wanted shorts. But we ended up saying, okay, we may have to change our bias here, but we're ready. We're prepared to go both ways. We're prepared to take out previous day high, and we're also. I didn't actually move to break even. I just went below for previous day high to this key level here, still giving us profits, right? We wanted to crack lows if we get a reversal from this point, but I'm looking for us to be able to sweep midnight open. I want us to take out midnight open for our first initial TP frame on a 15-minute chart. I want that midnight open. Do we get it? I don't know, but let's just see if we continue to climb. Right? So us missing that completely. Let's just see if we continue to climb. What put us in position in order to be able to miss out on one of the biggest moves where I know we've taken trades like this before, right? Like obviously we'll be so close to hitting TP. And then the market just literally reverses back, and we end up had an opportunity closing out at our initial entry. I saw the same thing. That has happened to us numerous of times before. But the thing is in the market, you just there's not what did Kevin Chenault teach us? Control what you can control. We can't control the markets, but what we can control is our performance, the way that we show up. Within my ruach, it said, "Hey, us understanding key levels." Us putting ourselves in position in order to be able to win. What is AAW? Look at this pullback that we're having here. So we want to just continue to get this trade some breathing room. But we posted our wins and we was like, hey, we're going to post this in the chat, right? So we're looking at this. And I'm like, okay, the market is reversing on us here. We should have closed on our position, but we was allowing the trade to get some breathing room. But we did not jump up to the higher time frame to be able to see the reaction off this gap, right? So last night, the same thing comes into play on MNQ. So chat, let's take a look at it now. This is us on a 1 minute time frame. Let's here, and we're gonna go back to the charts. And I took this move initially on ES2 as well last night and on MNQ. And I'll show you profits of what it is of what we made on this trade. But we're going to drop to the 15-minute. Look at this setup. It was so beautiful last night. Right here. If you pay attention and look, I'm going to drop down to the 5-minute. It's going to look even sweeter. Look at that. Rally to the upside, right? We created an order block efficiency here. Here's that 15-minute fair value gap. Once we break the trend line, right? We broke the trend line, and I could have entered into shorts right there immediately after the break of the trend. But I said, you know what? I want to exercise just a little bit more patience for confirmation on this gap to be able to see how it plays itself out. I was able to get a little bit more confirmation because what did we do? We broke down, we rallied back up into this gap here, right? Once we rallied back up into the gap, we started consolidating. And once we accumulated, this is where I entered into the position and I entered into shorts. And once I entered into shorts, it was murder she wrote. And I said, "Oh my goodness, this was the same exact setup almost of look, look at where we had our stop right here above the gap. That was here, and we caught this full move on last night, laying down in the bed. I kid y'all not. I was like, oh wow, we're approaching the same gap on a 15-minute. Look at it. What did we have? That rally up, break, rally back into the gap, boom. I was like, there it go. It gets no better than being able to see the mistakes it was of what you made earlier within the week, right? On FMOC. Look at this. If I could chart this back, if we're taking a look at this, think of it just like this. There's the trend line, right? And we're gonna let this. Let's just go to the 5-minute to see what we're looking like on the 5-minute chart. So this is that fair value gap that I was telling you about here. That's why this is the problem that gets me. We see it on the 5-minute. I probably should have pulled us 50% into this fair value gap. We literally are watching it on the 5-minute. I probably should have pulled us 50% into that fair value gap. Look, for a first TP. If I even drop to a lower time frame, instead of having TP right at midnight open, I do in this video, right? Where we that's the mistake it is that I'm seeing right now. Is that we should have went 50% within the 15-minute, that 15-minute fair value gap, because this is what we're acting off of. All right, go ahead and get out the trade. We were acting off of the 15-minute. Look at that. But we didn't. We were acting off of that 15-minute, and we wanted to take it out. We should have had it at 50%. If you look at 50% of that, we would have hit first initial TP. But if we go, I'm just waiting until I drop to a lower time frame. I hope I drop to a lower time frame. So you're getting, this is what you're getting that pullback from. This is what you're getting that reaction off of. So you'll be able to see. Is off of this. You'll be able to see exactly what I'm talking about. So let's just wait and see. I don't even know why I was still hanging around. Okay, here we go on the 15-minute. So when you see it on the 15-minute, right, you see how it rallied right into the 15-minute? Right into the 15-minute. Look at the reaction. Boom. Immediate pullback. That's when we should have got out. But the greediness, this is why I talk about psychology. Still want to be a little bit patient. Patience is everything here. You want to control your breathing, control your mind, so bad, control your psychology. Previous day high and the liquidity of what was here. We wanted if the market decides to pull back and take us out of the trade based upon where our stop is now and where we move, we still made some profits within the trade, right? We still walk away with something. That's where we take our entry. We don't want to give the market everything, but we still walk away with something. Went on ahead and tumbled on all through all our key levels of what we had marked here for shorts. It tapped through all those key levels of what we had marked through for shorts. And so when I saw the opportunity present itself again last night, because look at the trend line here, and then you have a break of the trend. I hope I could go to a lower time frame during this video, because it's much more detailed if you see it from a lower time frame, because you will be able to see the trend line, the break of the trend line, right? The retest, and then the continuation. You would have been able to see it. Break, retest, continuation. So the same setup happened last night. Once we got that setup last night, it was like music to my ears. Boom. Reaction off the 15-minute. Wick right into it. Took that same setup. Bow. Beautiful. Can't beat that. And that's the hard work of what it is of what I'm talking about, and the difference between people who are actually going to show you where they made mistakes. See, here's that uptrend. This is what I wanted to show you all on like a lower time frame, right? When we look at it from a lower time frame, you can see that trend line of that small rally of what we had, right? You can see that trend of the small rally, the break of the trend, accumulated, enter into the gap, boom. And and so me missing that earlier within the week and then get the opportunity again that presented itself last night, it was like, take it. It's money on the table. Are you going to leave the money sitting there on the table? And last night I couldn't leave the money sitting on the table. I had to take it. And I hate that I didn't take it on live. But I said, I'm going to come on live and I'm going to show exactly where my mistake was. And I'm glad that it was recorded. And then I'm going to come back and show you here's the second opportunity it is that presented itself and how I took advantage. And this is how savvy I want you to be in the markets. I want you to be just as savvy as I was, just like this in the markets. That's the difference here. This is the difference between me selling you on something, but actually being able to come back and show you how to do it in real time. It's a whole different ballgame. It's a whole different ballgame. All right. So let's go ahead and get started. I know the first thing it was that we wanted to talk about was we could look at the Fed fund rate, right? We're gonna look at this from a monthly chart, so we'll go ahead and reset this to be able to see. So since FMOC, the Fed fund rate sitting at a 3.6, and I know those of you who like things like this is how you gain advantage within the market, right? This is how you gain an advantage in the markets, right? When you're able to see things like this. So looking at the Fed fund rate and understanding the Federal Reserve effective fund rate for the entire economy, this is how you know where we're headed. And so with the Fed not cutting rates, you could see we kind of flatlined a little bit, right? We were no longer up in that trend. And this is where I want to tell people so people could have an understanding of who whose economy were we really hanging off of during the times of when everything was good, right? And most people would say, "Oh, it was the Joe Biden economy of when everything was good." Da 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 da. And I'm trying to tell you, no, it was not. When did Trump become president? If somebody's paying attention that's in the chat and you're watching live in the chat right now, tell me when did Joe Biden become when was Donald Trump's first term as president? Because this little bit of education can go a long way. This little bit of education can go a long way. You understand it now, Kay? I'm glad you understand it now. But who can tell me when Donald Trump first initial term of president, of him being president, when was his first term? Was it 2020? Um, nope. It wasn't 2020. It wasn't 2020. If you got to use Chat GPT, I don't care. Go use Chat GPT. This is an educational moment right here because you will have a better understanding of when you are lured into thinking one thing that is not true, and you'll be able to determine it yourself being a person who is active in markets, right? And that's when it comes to investing, that's when it comes to you trading, you will be able to have better understanding of our economy, where we are, where things are headed. 2016, correct. 2016. So 2016 was Donald Trump's first term in the market, right? As president, right? So if we go back just on the Fed fund rate, I'm just going to use the Fed fund rate. I'm not even going to use anything else to be able to prove this point. This was 2016, right? Trump takes over. Now, who economy did Donald Trump take over during this time frame? We just all we doing is backtracking a little bit, just doing a little homework of backtracking. Who economy did Donald Trump take over during this time frame? And I'm gonna wait for you all to answer this question. I don't want to jump ahead. I want to give you time. I'm gonna wait. Obama, correct. So he took over Barack Obama's economy during this time frame. Now, Barack Obama, what he had to deal with was the 2008 financial crisis, right? Obama had to deal with that. So if you look at the years of what Obama had to endure and what he had to deal with, obviously nothing was great during that time frame, right? 2008 crash, we have all of this of what happened here. So Obama put things and measures in place in order for the economy to do what? To grow. So by the time Trump took over, there was no significant changes of what Trump was doing when he entered into the presidency in 2016. You had to give time, which it takes time for the things of what was implemented during this time frame after the crisis of 2008, right? We had to do what? Recover. We had to go through a recovery phase. So us going through that recovery phase was Barack Obama's term in office, where he put things and measures in place in order for the economy to thrive again. It did not happen on Trump's time frame in 2016. Now in 2016, what you did get was relief on everything of what happened in 2008. And because Trump was sitting in office, it will have seemed as if Donald Trump, did all the things that was necessary in order to be able to bring us and uplift us and back to a thriving economy. That's false. Obama did a good job of saving the industries, right? Same. Yeah, you're right. Absolutely. He saved the auto industry during that time frame. But not only the auto industry, there was other industries too as well. Because we could go back and look at things specifically of the auto industry, healthcare, all those things. We could go and look at those specifically. But during an overall measure of this is what we're going to pay attention to on an overall measure and aspect. So during this time frame, right, Trump takes over, we enter into 2020, and we get hit with another crisis. What was that other crisis we got hit with that brought us here? What was the other crisis that we got hit with that brought us to this position of where we are right now, where we had a serious decline? The collapse of the housing market. Yep. That was in the collapse of the housing market was in 2008. We haven't had too much of a housing market crash during that time frame. I would say that you had really good low interest rates during that time frame, but it wasn't a significant crash like how things were back in 2008, right? So that crisis of what we had was the COVID. COVID came in 2020, right? 2020, and the economy had to suffer and endure, right, during that time frame. But the things of what was done in 2016 that led up to 2020 of Trump's era, right? Then you have the handover into Joe Biden. And once Joe Biden entered, you catch what? COVID-19, right? So COVID-19 pulled us back, and everybody want to say, "Oh, Joe was doing a great job." Da 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 da. No, it was not. Joe did not do a great job. There was a lot of things that Joe allowed to happen, infiltration within the United States government and a whole lot of other things happened on his watch. Okay? Get that understood. Trump couldn't account for this crisis of what was going to come here because he was planning for everything of what was going to happen within this range here. This was Trump's range. This is Trump's economy. COVID wasn't, COVID came literally, just being honest. It's almost like somebody throw a wrench into what you're doing, right? Like say you're building something good, and then say for instance, like a little bit of you're building a house, and a little bit of your foundation, right, collapse, right? But it was unexpected. COVID-19 was totally unexpected because that wasn't something that was like the dot com bubble. It wasn't like when we had the dot com bubble happen, or the financial crisis that happened between banks and things like that. It wasn't any of that. This was something that shook the economy, and it had nothing to do with with nothing at all. Period. That was more economic base. It was a health scare. Absolutely, it was a lot of insider things happening during Biden's time, right? Because Nancy Pelosi, those of you who aren't familiar with her name, but if you're familiar with the Pelosi last name, right? Their family is, and I'm not afraid to say it. I said it already on TikTok. Their family is the mob. Like they are really the mob. You could go and look this up. Do your research and study on the Pelosi family, and you will see that she comes from the mob, her family. And this goes all the way back to the whole setup of what happened with United Healthcare, right? All during that time with that insider trading stuff. Nancy Pelosi taking all her insider trades. Like we were making money with Nancy Pelosi during this time frame because we was actually following the trades of Nancy. Now the thing is that we caught whiff of one of the best trades Nancy made was with this cybersecurity company. And I'm just going to allow y'all to do your own research on this because I don't want to speak too much on it. But Nancy literally set herself up right with this one. Like it was so perfect. They knew they was going to be shutting down this healthcare company. They knew it was going to be shut down. Once they knew the healthcare company was going to be shut down, what did they end up doing? Nancy ends up taking this cybersecurity company who was going to be given the job to be able to do the cybersecurity on the company. They get the job. How did Nancy know that to take a trade with that company? Because once it was announced that they got the job, this company skyrocketed. Nancy makes millions, and it left us thinking, how in the world did we get here? How did we get here? So during this time frame, right, we couldn't account for COVID. That's why it was very short term. It wasn't as long term when you go back to the real crisis of what happened during this time frame of Obama being in office. It was very short term here with COVID. That's why I was like, it's somebody who threw a wrench in the system, right, like a glitch, and tried to disrupt the upbuild of the economy. But sometimes those glitches are good enough to be able to take us even higher into places in which we did. We soared, right, during this time frame, and now it's kind of like we're flatlined a little bit, but we're flatlined enough to be able to soar again from this point. So that means that Donald Trump is actually, when you're paying attention to the Fed fund rate, doing a good job to be able to uplift the economy in 2027, 2028, 2029. You're going to see a significant change in impact within the economy. And people are going to tell you, we're reverting backwards. Oh, times are hard now. No, this is short term. This is short term pain for long term gain. It's short term pain for long term gain. So if I'm a person who's in the market and I understand that, hey, right now the Fed fund rate was at a high of 533. Now it's at 363. They're not making any significant changes. Money is still going to be a little bit. We want money to be a little bit cheaper for us to be able to get to be able to start doing other things like investing and rebuilding and things of that sort. But right now, they're keeping everything the same. So if they're talking about a Fed rate hike, let's get some understanding of what that actually is. A Fed rate hike is when the US Federal Reserve increases its benchmark interest rate, making it more expensive to borrow money. This move is primarily used to slow down the economy and fight inflation. So if they're now making it harder for us to be able to get money, they're making it harder for us to get money. If they're talking about a Fed rate hike, and we could ask this question, we could literally go to Gemini and ask Gemini, and we could go through Kevin Warsh's speech and say, hey, did he speak on this specifically about this Fed rate hike? Where is this noise coming from? Where's the noise coming from? So let's ask Gemini to see. We just wanna we wanna get clarity. So look at the clarity. Yes, in his first FOMC meeting, which we just had, right? Kevin Warsh addressed the potential for future interest rate hikes while navigating persistent inflation. While the committee unanimously voted to hold the benchmark interest rate steady at 3.5%, 3.75%, the meeting leaned heavily hawkish. In his debut press conference, Warsh and the committee officially opened the door to higher borrowing costs. That means it's going to be harder for you to be able to get money, to borrow money. This is why I said you got to be in the business of being able to create wealth instead of allowing things to be able to come to you because it's going to be harder for you to get. These next few years, it's going to be harder for you to be able to get money. And the reason why they're going to make it harder for you to be able to get money is because you're not going to be able to have opportunities to be able to use that money to invest when the time is right to invest. And when those certain things of what we talked about skyrocket and take off, yeah. And those are the things of what I'm talking about in ISO 2022, that package, you're going to be ones missing out on opportunity. It's just facts. It's facts. The writing is on the wall for the reset. The writing is on the wall for the reset. That's why I said, you know what, today let's not focus too much on trading at all, period, because we don't like to trade. It's an institutional bank holiday, right? So obviously we're not going to get the significant moves it is of what we're going to be looking for today. So it's best to just stay out the market. You could do some tape reading if you choose to, or whichever the case may be. But this is a day that you'll be able to just take some time and go back and look at things to be able to see, okay, where we are real quick. We just had our first FMOC meeting with Kevin Warsh. What was he talking about? And what do it look like for the next years year of where we're headed? These things are important. These things are important. So this is what Marty was talking about in the chat when he said the collapse of the housing market, right, was during this time frame. If you go from 2018 to 2020, you had a slight pullback within the housing market on interest rates, right? You had interest rates sitting at about 4.8% nationally, and they came down as low as 2.5%, right? Like 2.5%, 2.6%, right? I don't think you ever will see interest rates at that low again. That's why I was like, if you're buying houses right now today, you're literally paying the high, like you're paying the highest on interest versus the opportunities of where you could have got it in at 2.5%. So now when you're trying to understand, well, why is my rent going up? Why is it so expensive to be able to afford housing? And people who are affording housing and buying houses right now, right? In this type of market, this this opportunity at 6.5% may probably be the best for you. But I'm a person who says, nah, like I rather sit on my hands right now and wait. There's not an opportunity for me to buy right now. And people who are buying are people who you better have a strategy. If you don't have a strategy, then you're wasting money. You have no idea how money works. You have no idea how the housing market works. All you're thinking about is buying a house and sitting in a, 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 a death sentence of that 30-year mortgage where none of your money is applied towards your principal. It's all going towards your what? Interest. And if you're a person like me who wants to play that game within the market and have understanding, go and look at the playbook that I gave all over Facebook. Go back during 2020, 2019, during this time frame here. I literally gave us a playbook, a free playbook on how to get yourself within the game during real estate, showing you really truly how to do real estate investing. But people didn't want to pay attention to that because everybody wanted to get rich quick schemes. They wanted to follow those who were showing you flashy things on social media. Now, where are they? These same people, they're indicted. People like Greg Parker, Jay Morrison, that other couple who just got 40-year sentence. All they did was sway you over social media, show you flashy things. And it's not me hating, but it's just a simple fact of, you know what, I am hating because I hate what happened to our community. I hate what happened to our community. And this is why especially in the black community, it's so hard when you try to share things with people, right? But they want to see things from a different perspective because they want to see flashy items. They want to see chains and cars and things like that are really bought on a loan, just like a rapper's life. Stuff that's not even real. They setting up is all content to get you swallowed in, and you're paying them what your savings is, and they end up getting indicted for scamming you. And I know it make you feel some type of way, but it's okay. You sometimes you got to call it out. But I gave you the full blueprint on Facebook in 2019, and you could have been laying those bricks to build your foundation. So now, being in this time frame of where we are now, is easier for you. So let's take a look at our M2 money supply. So you can see right now, a lot of people are doing what? They're sitting on savings. They're not spending money. They're wanting to sit on savings, even though that's is only earning them 0.01% APY on their money. But you can see a lot of people are trying to save as much as they can in this type of economy. So the banks are sitting on cash from what people have within their savings. But the thing is that the banks is suffering problems from their commercial real estate, where people have now defaulted on all those loans. And so it's putting the bank in a position of where they got to do bail in. And if the banks go bail in, then all that FDIC insured goes out the window. It goes out the window. So that's me, man. Just having a little bit of a rant. you know, it's just me having a little bit of a rant. But at the same time, it's just me just wanting to share with you, giving you some overall perspective as to where things are headed within the economy. All right, so let's take a look here at at gold, our gold futures, right? And look at where we are. This is where we are right now. We got and it's looking as though we're approaching to get ready to take sell side. But we're hanging on to support here. We are hanging on to support here. Hanging on to support. So with us hanging on to support here and looking to be able to take out sell side, that's what we want to hope for, right? Is that we do take that out. If we do come to take out sell side, this is where you could get an opportunity to be able to invest into gold. I wouldn't say get gold now. I wouldn't touch it now. Not right now. I would still allow it to continue to pull itself back. This is where you got to sit on your hands and exercise some patience. Exercise a little bit of patience with gold. But you see this line here is a real significant line when it comes to gold. You can see once we touched this trend line and we found some level of support that was here, we had a minor bounce, right? A little rally up, and then the market started pulling itself back and it pulled itself back to this support. So where do we go from here? Do we come and take sell side? And I think gold comes and takes sell side. That's just my opinion on that. We take a look at silver. Same thing for silver. If silver is on a continuation from here, right? If silver continues to go up from here, then you have your key levels that are here, right? But with silver, I mean, it wasn't too long ago when we had $75 at silver. Then we lose that and we come back to support here on this trend line here, right? We come back to support. And if we lose support on silver, we're seeing our next level at about $45 of silver. Coming back to this level of support here. Here, we can make this black. Us coming back to this level of support here on silver, $45 silver. If you missed out on grabbing silver when it was around 28 bucks, you getting the opportunity to grab it at 45, uh, I wouldn't I wouldn't hesitate. I wouldn't hesitate at all. That's just me. But these things now we just have to give it some time, right? This is an important level of where we are. This is why you have to keep your eyes on this. we are at an important level. If we lose this trend line, this is what I see. I see a break, retest, coming back down to this level. Well, not this far down. I'll say more of a break, retest, and coming back and finding support on this level here. And that's around that $45 mark on silver. That's precious metals. That's where we are with it, right? So let's take a look at Bitcoin. And instead of using our futures, we're going to use our Bitcoin chart here. And obviously, we're not even going to look at any type of continuations because I still honestly believe that we're coming down and we're going to see around a 49K Bitcoin. But we're on the weekly, so let's drop down to the daily. Stretch this out a little bit more. And look at where we are in this channel. We're at a level of support. That's why you have a little bit of a small rally with Bitcoin. But if you lose this channel, you lose this trend line here on Bitcoin, what did we say our next level was? Around 58,843. That's where we said our next level was if Bitcoin was to lose that. And you still have some sell side that is sitting around that 49,000. That's around this level here where this arrow is. So if you draw it out a little bit further, look at that. Look at that liquidity that's sitting there at 49. So if you're a person who is thinking, man, I'm if people are selling you dreams and hopes on Bitcoin, you have to be smart enough and intelligent enough to be able to understand when is the right time. Right now, it's not the right time. It's not the right time. There are other things and measures in place that are taking off right now. Like when we take a look at crude oil, obviously within oil had its nice run, and now oil is pulling itself back, erasing everything of what was gained during all the noise of what? The war in Iran, the Strait of Hormuz. It about erased all those gains. Look at that. It done already cracked below. It already cracked below the golden zone. So you're seeing crude oil pull itself back down. That means that you're gonna have better what? If you see this pulling down and pulling back, that means you're gonna have better what? Natural gas. So if oil is pulling down, right? When oil rallied up, what pulled down? Natural gas. Now that oil is now pulling itself back, natural gas is going to do what? Go up. So gas prices are going to get better. In the event we don't have And I'm not gonna say this out loud because you don't want to just say these things out loud. In the we don't have one of these events that happens. In the event you don't have one of these happen here, right? We can make it bigger. If we don't have one of these events happen and take place, then yes, things are going to get better. I'm just not going to say it. I don't want to jinx the economy. I don't want to jinx us at all, period. But if we get something like this that happens, right, in which there's always that possibility, this is where I talk about where they throw that monkey wrench in that just throws everything off, kind of like how COVID did, right? When we went back and we looked at the Fed fund rate and we was looking at the time frames and we was like, this is where they threw that monkey wrench in right here that threw us off, right? This ain't no monkey wrench of what happened here. This was a real financial crisis, housing market crisis, or everything all in one that happened and took place during this time frame. But you come back to here where you got COVID-19. That's just was like a monkey wrench thrown in, throw you off a little bit, right? We was able to rebound for a couple of years, got ourselves right back where we needed to be, and we went even higher. I am expecting somewhat of a monkey wrench. And I'm not saying that we're coming back all the way down here, but I do see us coming somewhere up in this gap. That's just me. I don't know what it is, what it's going to be, what we're going to hear at all period. I don't know, but this is where I would just be a little bit cautious in certain things. Pay attention to certain things. That's just me. That's just me. So let's take a look at something else here. So if we can go back, switch things up a little bit. How many of you all can remember? Uh, and I could pull this up too as well. This is why we keep receipts, right? Men lie, women lie, but numbers don't lie. And it's good to be able to keep receipts so that we could be able to revisit things like this. Where we talked about the dollar was going to fall. A lot of people did not believe me. They didn't care at all, period. Or whichever the case may be, especially during this time frame in 2024, where I was telling them, hey, be prepared for the dollar to fall and understand and know where we're headed within the community, in the economy, in your own community, right? Things are going to get a little bit tighter and expect for your financial system to change once they're ready. I still think we're about a year or so away from us having that full significant change, maybe 2 years, or maybe by the end of the term, right? Of Trump's run, maybe by the end of his term. And so, if that is the case, and we're building towards that, in order for this dollar to be able to come back and be strong, it's going to have to be backed by something. It can no longer be sitting as an IOU because that's all it is right now. It's not backed by anything. It's not backed by gold. It was taken off the gold standard. It's not backed by anything. That's why people are chasing and looking for stores of what? Value. So when you take a look at this, right? We dropped as much as 13.4% in the dollar. That's huge. Us dropping about 13.4% in the dollar. Obviously, we're consolidating a little bit in this, what I would consider this bear flag pattern. We're consolidating here, but in order for us to be able to get back to where we actually want to be, something is going to have to happen. We're going to have to be backed by something, right? But it's interesting, oddly enough, because you're able to determine when there's a true way of decoupling your mind to understanding when to when to buy certain things. So me knowing during this time frame, now you're going to start understanding what my entry points were. Me knowing this in this time frame, when I pointed this out all the way back in 2023, and I was telling people in 2023 to take position, you could go and look this up. They keep this stuff on my social media accounts before I walked away from social media like that, right? When I walked away from Facebook, I just got to a point of where I was tired of trying to stress to people things of what was going to happen, because it's almost as if you're in when you have eyes of not predicting the future, because I don't want to say I'm Cleo here, but when you have the gift to be able to understand how the economy waves are moving, when to invest into certain things, when not to invest into certain things, and you could kind of see things and have a spot on eye for the economy, and you begin to share these things, people look at you as if you don't know what you're talking about. Or they look at you and say, hey, I don't want to listen to you or whatever. I'm going to do my own thing, or whatever the case may be. And they're thinking, and their way of thinking of doing their own thing, it leaves them in a position of doing the same thing over and over and over again, making the same kind of money they're making over and over and over again. And they wonder, why can't I get over the hump of creating generational wealth? Generational wealth, not thousandaire wealth. Everybody got a couple of thousand. That's cool. But generational money for my family. And I have it in a store of value, and I know where to go and plug. That's why I said there's certain things that are stores of value and things that are not store of value. So when the dollar was falling during this time frame, what did we just come and take our eyes off of? Did you see that? So it makes it much more understanding of that $2,500 entry point. Oof, around here, right? Around here, right? Of all the opportunities of when I said to purchase on gold, I marked them. I said, y'all, I'm gonna show y'all when I buy. And I haven't bought any more since. I'm just sitting in hella profit. But I understand the economy enough to know certain things, when certain things happen, when to enter in, and when to not enter. And then that is the gift that keeps on giving. Same thing here with silver. The gift that keeps on giving. People don't want to hear noise during times of where the market is quiet, right? When we're just consolidating, when we're just hanging around just a little bit, nothing of significance is really happening. That's when people are paying it or not paying, don't want to pay attention, right? So you see this move here, Even when all the noise was surrounding the hype on Bitcoin, right? The noise really started heightening itself when Bitcoin was at around 55,000, right? Now you're getting ready. Bitcoin done did a loop you all the way back around, right? Take you up just to bring you back down. When Bitcoin was around here, and we can make this look a whole lot better when we do this. When Bitcoin was here, what do we see here? This was your time to be entering in, right? It was kind of a time to be entering in, right? You heard a lot of noise during this time frame in 2024 for those who wanted to catch that last leg, right? That last leg up. If you was coming into the game at the very last minute, this was your last opportunity to be able to hop in during this time frame, right? When everybody knew that this was the last leg up and when they were going to take profits. But because you became exit liquidity for most, and you did get in, for those of you who did get some, and you did get in, you became exit liquidity for most, only for this thing to be able to pull back on you. And the money it is that you put in seemed to bring you all the way right back to what? Zero. And you wondering, dang man, I ain't make no money. I saw money when I had it a little bit, but then I ain't make no money. Not knowing when we hit the top on the market. And so these are things of what we discuss and what we talk about all the time. Even when I share these things with people, right? Here, let's go here. When I share these things with people and I put out what? A whole crypto cheat guide that people they're not willing to go, they will go and purchase other vices and things of that sort, but stuff that makes you real capital, real bread, real money, puts you in a generational state for your family, gets overlooked. And so you're left holding the bag while we are multiplying the bag. You're left holding the bag. I was trying to tell people during this time frame, especially those who were new coming into the game and with just crypto along, and they were coming in at the last minute. And the time that they usually come in is when we enter what? That euphoric state. When we enter that euphoric state, that's when they want to come in. And I'm like, nah. I don't have no beef. I'm just trying to show you where we are within the market. And where you came in at was during belief stage, where you started to believe. And then when we hit euphoria and you see money in your pockets, everybody doing what? Walking out. We walking up out that thing. And it leaves you wondering why, when you could have just easily grabbed this crypto cheat guy here of what I had here to help put you in position. But it's hard trying to get those to understand the game when the game is to be what? Most people think the game is to be told, not sold. You're only going to be told so much. But the things of what you actually want, you're going to be sold on. Even with this information it is that I'm giving you is only so much that's going to be able to help you. But for the realness of what you need, that's something that you're gonna have to be sold on. That's something of where you're gonna have to actually give your deposits into the game. But most people aren't willing to do that because we're all looking for handouts. We're all looking for something to be free. We're all looking for something to be shared with us for free, or whichever the case may be. But this economy wasn't built on nothing that was free. There's no such thing as free labor. I'm gonna say that again. There's no such thing as free labor. It don't exist. Free labor don't exist. And if somebody told you that it exists, they lied to you. People say, "Oh, well, what about the people that's in jail?" That's a cost. That's taxpayer cost. Taxpayers are in position to be able to make sure that the jailers or whichever the case may be are getting just enough of what they need in order to be able to go and execute the jobs and the labor of things at hand. That's taxpayer money. Just like it's taxpayer money when it comes to things like EBT and all these other things. It's taxpayer dollars, man. Taxpayer dollars. Like, look at this. When you take a look at some of these certain cryptos, it's like, why are y'all still holding on to this stuff? I think you need to let it go. There's no reason. Look at this. This is horrible. Horrible. I could just go down the line, go down the list. Horrible. 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 It's just it's a continuation. So I hope that in the future or now, when opportunities present themselves, right? Because they do each and every day within the markets. They do. But I do hope you have a better understanding from the things it is of what we share and what we're sharing here at New Level, because I can only give you so much because everything can't be given away, right? But I hope that the little bit of insight of what we do give is enough for you to be able to say, you know what? Now is the time that I actually start taking things serious. Now is the time that I actually start taking Jeremy serious. If we just take that small time frame from 2019 to where we are now, and just off of the little information I told you, this is how I was able to supersede everyone within my family in that short period of time. And they've had years to build wealth. Years. Way before me. Better jobs than me. Better everything. Isn't it? And there's no knock at all, period. Right? But the one that I serve opened my eyes to be able to see when they were once blind. Everybody want to make things literal and physical from a physical aspect when it's more from a conscience aspect. And I was sharing this the other day with my girl the other day, and I was telling her, I was like, babe, these things, this, all of this, even the Bible itself, is all about pure consciousness. It's about your conscience, and most people stay sleep in that realm, and they don't want to be awakened. But those who are awakened, they tend to ascend in the mind. That's where you reach heaven because you are ascending. within the mind, within the thought process. You ascend in the mind. And once you start ascending in the mind, that's where you're reaching heaven. It's those that don't who don't ascend and they stay within the same place and they're fighting the same race over and over and over again. And they're understanding what's not working. They're fighting those same battles over and over and over again. And the reason for that is because what? They haven't ascended. They haven't awakened. True consciousness come to those who are prepared and who's ready for what's to come. Those who are never prepared and those who are never ready, they're always going to be stuck in the same boat. And that's just what it is. That's just what it is. It's no knock. It's not to make anybody feel no type of way at all, period. But it is the truth. Okay. So there's some things that I wanted to take a look at real quick. I'm still liking this of where this is right here on Weeble, man. I'm telling y'all, this is one of my favorites. I kid y'all not. Like, that's one of my favorites, man. Um, I'm loving that. I'm loving that. But we're gonna go down the list right here of a few things. Obviously, with MicroStrategy, we see what's happening and what's going on with MicroStrategy. Getting Michael Saylor to sell for the first time. Let's just take a look at that. I want to look that up real quick. Like Michael Saylor selling for the first time is Michael Saylor's company Strategy, formerly MicroStrategy, sold 32 Bitcoin, roughly 2.5 million, between May 26th and May 31st, marking its first sale since 2022. The company sold the coins to fund preferred stock dividend payments and announced a pivot from its historic never sell stance to actively manage its balance sheet. What does that tell you? That whole thing of what they sold you on, never sell, you got to be foolish. You got to be foolish. That's how you become exit liquidity. I find humor in that because you had a lot of people who literally hang their hats on hodl. I got diamond hands. That's what they tell you. They have diamond hands. These are the same ones who don't know when to take profits and exit out the market. And you literally seen Michael Saylor who sold 32 Bitcoin right back in May 26th of this year. Sell 32, which is roughly around 2.5 million. That is insane to me. That is insane. That is insane. That is insane. I don't even know what else to say when it comes to that. Like, that's probably one of the funniest things I saw when I'm looking for something to laugh about within the markets. I really look at those people who are involved in crypto and who be holding on to Bitcoin and thinking that it's never like hold and never sell at all, period. And I'm like, look, that only works on certain things, man. It depends on what it is of what you're looking at. Here's another one, and this is the last one. We're gonna do SpaceX real quick, but I want to give you an opportunity to be able to look at Tesla, right? So we got about 3 minutes before we end this. So we're looking at Tesla right here, right? And we see Tesla. And so what we're understanding is with Tesla, we got this break and this retest happening here. and we may get a continuation on to the downside, right? On this. So you see, Tesla, there is this company that I was telling everyone about, right? And this company is a good company. I mean, it's an ETF, right? And this ETF is a ETF that holds 14% of Tesla. And the ticker symbol is RONB. RONB, right? So they hold 14% of Tesla stock. And we're looking at this chart on a daily, right? So this particular move of what happened here, right? During this time frame was the move of what? This was the move of the launch of SpaceX, right? That was the launch of SpaceX. So this company holding 14%, which is their biggest holder, Tesla is their biggest holder, right? If you're looking for some exposure, this is what I tell people. If you're looking for some exposure into SpaceX or whichever the case may be, but you don't want to purchase SpaceX directly due to some of the volatility and the things of what's those certain pre-measures that they have in place of where you have to hold for 60 days, you can't sell, or I think it's 60 days or 30 days is one of them where you can't sell at all, period. And then they only release 5% of those shares to the public, right? And they're going to release more like August the 11th. They have dates set where they're going to release more shares out to the public. Now, during their time frame of them releasing out more shares, what do you think is going to be happening up until this point, all the way up until Elon can have his opportunity to sell, which is at the end of December? What do you think is going to be happening during this time frame? Exit liquidity. They're looking for a different way to be able to take profits, and you're left holding the bag. But if you are a person who wants to be so involved into these things, then you should take a look at RONB. RONB holds 14% in Tesla. We know Tesla has somewhat in a hand within SpaceX, right? So if you're a person who can't afford to purchase the shares necessary for Tesla, you should be looking at bearing first principle, okay? You should be looking for at bearing first principle for Tesla and some exposure to what? SpaceX. All right. So that's a freebie of what we gave right here on today. And we're gonna take our last look before we walk out is taking a look here at Tesla. I mean SpaceX, right? So taking a look at SpaceX and its journey. We're on a daily. Let's drop down to the hour so we could be able to see, have a better idea as to what we see here. And if we take a look here, look at what it did. It pulled all the way back and rested right here in that golden zone. Now that it rested right here in the golden zone, you can see it's starting to have that rally to start pushing back up, right? So you want it to be able to crack above the 50% level. If it cracks above the 50% level, then they continue on higher. But we see it got rejected at the 50% level and it had a slight pullback. And now that it has a slight pullback, and it's a holiday now, the market is closed. It had a slight pullback. What is going to happen next? It's kind of leaving you in an indecision to not know. But if you're a person who says, "Man, I want to get involved into this thing," we just gave you the ticker symbol of where you should be getting involved instead of putting yourself directly involved into SpaceX. Okay, that's me looking out for you and doing it from a way of love, right? Right, because that's all we care about at the end of the day is making sure that People are protecting their capital and doing the things necessary for their family, man. So it's all love. I appreciate you all. I appreciate each and every person who has you know, been a part of this journey. So let's keep it going. Let's keep doing the things necessary in order to be great. And I appreciate each and every one of you all. Happy Juneteenth.
Yes, I